And welcome back to Cheeky Crypto. My name is Nick, and today, guys, we're going to be jumping down into the world of Bitcoin, reviewing what's been going on most recently with the price action and what I think is likely to happen next. Now, as I get into today's video, if you do find it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe? You can always unsubscribe later. And if you haven't yet joined us in Discord, what are you waiting for? Check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. Let's waste no more time though. Let's jump right down into today's video, covering a little bit of the latest news when it comes to Bitcoin. We're going to kick things off right here, where we do see some interesting stuff in the news around whether or not the crypto market is actually looking for a correction to the downside a little bit further. Obviously, we'll jump into the technical analysis in just a moment, where we actually review where I think the market is going. But from here, we can see that the stock market is in a sketchy position, and essentially here, if we jump down to the chart, you can see it's a double top hitting upper area of resistance on the S&P 500. Essentially, this actually shows us that we are in a potential area for correction, also just getting rejected from the 0.618 Fibonacci level. And so essentially this actually is an interesting thing, because it indicates to us that the crypto market, which is heavily correlated to the stock market and the S&P 500, could also see a correction where Bitcoin could drop down towards $22,000, right? And obviously these are some interesting numbers when it comes to Bitcoin, because it is something that we've been talking about within our technical analysis as well. So some interesting stuff. Other than outside of the kind of the news around the BRICS alliance gaining momentum, yet people not really kind of wanting to back it, or think that the nations are not going to be collaboratively agreeing with each other, that actually, people are suspecting that the BRICS alliance is going to fail. But essentially, I think the fundamentals behind that are very much quite basic, that there's no one really backing, or people are losing faith in the US dollar. And that is for the obvious reasons that the US government have absolutely wrecked it. And so we've got some interesting things around that as well. Spot ETFs obviously were delayed, and now you see a flurry of Ethereum spot ETFs as well. So we are, entering into a world where we're going to see a bit more, in my opinion, from the ETF stuff. But again, I don't think this is a quick win by any stretch of the imagination, and I do suspect that it's something that is likely to take some time to kind of play on out. And so for the most part, other than the kind of the basic things that we've been talking about for a while, there is actually a relatively low news. There's very little out there at the moment. There's lots of speculation as to kind of what's going on. There's lots of analytical stuff in terms of where the price action is going. But from a fundamental standpoint, or from some kind of like breaking news standpoint, there isn't terribly too much when it comes to specifically Bitcoin. We obviously have seen some stuff around Binance delisting pairs, specifically on the BUSD side and stuff like that. Again, all that is also found down in the Discord server. Let's go ahead and take this up into the data side, right? And we're going to head on over to membership.cheekycrypto.io, which is our membership website. Each member can enjoy a 7-day free trial, so you can try before you buy and all that kind of stuff. Of course, if you do sign up with a free trial, and if you don't want to continue, you have to head on over to your profile area, to your subscriptions, cancel it. If you do not cancel it, you will be charged. On the membership platform themselves, there's so much that we have to offer, everything from the AMAs, the exclusive videos, the technical analysis on requests, all the way through to some of the more kind of, bespoke stuff such as education, how to learn Elliott wave theory, smart money concepts, portfolio building, and of course the on-chain data. And we're going to be taking a look at the Bitcoin on-chain data today, which we're going to load up right here. And so the on-chain data for Bitcoin, we obviously have a lot of different things here, and we're building this out. It's going to be really inclusive soon. We can of course see the kind of the basic overview, right? We have issuance or inflation rate for Bitcoin sitting at 1.7452 annually. And 775 Bitcoin was mined yesterday, for example, all the way through to there being 49 million addresses, and 920 of those addresses, 920,000 of those addresses were active in the last 24 hours, right? And some interesting kind of stuff overall. And of course, you can jump down into a lot more detail on this, but we're going to just focus in on a few different things here. First of all, liquidations. Yesterday, we saw, or just yesterday, but the day before, so Monday, we saw that BitMEX had really unusually high liquidations for Bitcoin. It was so irregular, it stood out massively. And today we've also got some more strange oddities within the liquidation data. We see Bitfinex at the top of the list. Now, we have to bear in mind that BitMEX and Bitfinex are usually more aligned to CoinEx and Deribit. And so when we take a look down here, you can see that these are always down at the bottom, right, below everything else. And so even BitMEX sits higher than it would usually sit in terms of liquidations, currently sat at 1.5 million. But Bitfinex has completely smashed past all of them and became top of the list at 4.91 million. Okay, and so this is unusual. It's irregular activity because normally they're down here at 500,000. So they've got this extra volume of liquidations and we don't understand why. What's happened here? What's driven this? Is there really a flurry of extra users over at the Bitfinex area or exchange where they are leveraged trading and getting wiped out that way? Or is there something else going on the Bitfinex network that's actually causing higher than usual liquidations, i.e. maybe some wicks that moved up into down to an area or up to an area that basically caused people to get liquidated or get wrecked. Now, it's possible, of course, that these are legitimate liquidations in the same way that it's possible that they're illegitimate. And what I mean by that is sometimes the exchanges can push the price on the contracts to a point where it liquidates people. And, you know, I haven't gone into the detail of the Bitfinex side as to whether that is true or not. And again, I'll leave that for you guys to kind of investigate. Ultimately, it comes down to the basics, though, when I take a look at this data. I do not keep my crypto on exchanges, full stop. Okay, it doesn't matter if you are a really well-known, legitimate exchange all the way through to a brand new exchange with no credibility because it hasn't been around long enough, right? Essentially, the concepts are the same. Not your keys, not your crypto, right? And so a saying that exists for a reason. It's a saying that I don't like, but it's a saying nonetheless. Essentially, if you hold your cryptocurrency on the exchange, a centralized exchange, and that exchange goes bankrupt, then you are going to lose your crypto. FTX is an example of this, okay, and many others that have failed in the past. The best thing to do is make sure you have some kind of cold storage. I like Ledger, as you can kind of see down in the description below. We've got links to Ledger. I use a Ledger device every single day. It's my go-to. Now, it's a hardware wallet, so don't get mixed up thinking that there's some kind of backdoor that leaks your seed phrase or any of that nonsense. It does not exist. All that FUD is literally just that. It is basically people who do not understand what it is that they hold. It is hardware. You have to plug it into a computer and you have to tell it and give it instructions. You cannot, when it's disconnected from a computer, just have someone hack into it. That's the whole point of these things. So just bear in mind that there are many scams out there that do target hardware wallets, but these are mainly to trick you into gifting your seed phrase away. Okay, and there's many other kind of scams that are kind of, coming out of the woodwork as well. But the device itself is very, very good, and it keeps your crypto safe when you take it off of the exchanges. Now, that's not to say that I do not use these exchanges. I do have accounts on many exchanges, as you guys know. BitGet is my go-to platform at the moment, although there are a lot of these exchanges now doing KYC, and this is kind of something that we're going to see more and more of. So BitGet is no exception to that. Now, there are going to be people out there that will be looking for exchanges that maybe do not require KYC, that it can be used for futures markets over in Canada and the US. And we have just signed up with a new exchange which just does futures, that is regulated in the US and in Canada and does not require KYC. This is the BTCC network, and I will link this in the description down below so you guys can take advantage of that one as well. So like I said, spread the risk, sign up to as many of these exchanges as you can, and keep an eye on what exchanges are preferable, right? So in the data here, it's very, very key to keep a close eye on this. Now, Bitfinex represents 25% of all the liquidations, which is very, very high considering where they normally sit down at like 2%. So we know that they've jumped up the rankings heavily. Binance represents 19.69%, OKX 18.29%, and Bybit 13.33%. Huobi down there at 12.87 as well, which is also high. BitMEX is still sat quite high at 8%, and again, you have the usual area around 2% for the CoinX and Deribit. So for the most part, some interesting data to keep an eye on. Always keep an eye on the liquidations from an exchange point of view, as this helps us understand whether or not exchanges are struggling in areas. And this I'm going to update as well as I roll out a new version of the OnChain Data for our membership website. There's going to be a lot more information included at this particular level. Let's go ahead and start jumping down into the technical analysis for Bitcoin, right? And so we're going to kick things off with the 1 hour time frame. So BitGet is the exchange here, and the Bitcoin BTC USDT pair. Now, as you can see, we had a little wobble to the downside and then a rally back up again. Basically, a liquidation event occurred here, both liquidating the shorts and the longs, right? And this is quite an interesting thing to keep an eye on, because as we saw, it was reasonably balanced between the long positions being liquidated and the short positions being liquidated. And it's all right in here with this wick. You can see that we came down and then we pushed right the way back up. Basically, we liquidated the longs, we went up and liquidated any shorts that didn't get any profit taken either. Now, we haven't broken out of our B wave structure. Technically speaking, we are still sat inside this structure here, but the chances of moving up are getting smaller and smaller. So we're going to go ahead and adjust as per this, as a kind of, I want to call it the scam wicks, but as per this kind of move in the market. And our target range would change now to being a little bit lower, essentially 26,173 to 26,362. And the ability to move up into this range, I think, is getting harder and harder to see. But for the most part, considering we know that we broke down into the B wave before rallying, there is still this possibility that we do have this push upwards, but we can't do it until, first of all, we finish this little mini correction right here. And then from there, I think we'll end up with this being a B wave and then a C wave. So I think there's a shot at going up towards 26,000, but we have to be aware that we probably have to correct down a little bit first, so we can come down before going up and all that kind of stuff. So still technically inside this kind of little ranging pattern here for BTC on the 1 hour time frame. Take this up into the our daily time frame. You can still see that we are targeting out the bearish move towards 22,696 to 23,875. So as I was talking about earlier with the news and the S&P 500 hitting resistance just short of that 0.618 fib level, essentially all this actually boils down to a very bearish structure, and the targets from the S&P 500 correction tying into a Bitcoin correction actually coincides with the Elliott wave theory projecting $22,000 to $23,000 on a fifth wave move to the downside. So for the most part, everything here is actually kind of aligning quite nicely for a correction downwards. We are, of course, still kind of midway on our stochastic RSI as well, as you can kind of see just here. Not oversold, not overbought, and plenty of progression to the downside to be had. So I do expect us to kind of be in this little wave 2 at the moment. We'll look for a continued move down, a relief rally, coming back down. We wouldn't come straight down into this 23,000, 22,000 fifth wave low, in my opinion. I think we have to respect the idea that we have a kind of, 5-wave pattern of sorts, as in we should expect a move down, a bounce, and then further move down. May come down a little bit deeper, but if we are to see diagonal based patterns, then we are going to look at this slightly differently, where we maybe have something more like this, and we have this kind of really overlap like so, and it could take quite some time to play out. So there's a few things there to kind of consider when it comes to the daily time frame, and how the weekly time frame is also kind of coinciding together with that. Now, if I bring this up into the weekly time frame, here this is Bitcoin USD on the Bitstamp network, we can see, of course, that we are still resting on the 200 EMA. So our weekly 200 EMA is acting as support for us at the moment. We lose this, then obviously we will be looking bearishly, but it depends whether or not we're going to get closed position below that 200. If we get a closed position below the 200, that is going to be seen bearishly for next week, and so the bears will be trying to push the weekly close below that, a key level at 25,673, and we'll talk more about that probably on Sunday as we get closer and closer to that time. Now, when we take a look at this from a USDT point of view, it is slightly different. So this is USDT on Binance. You can see that 200 EMA sits at a slightly different position, 24,688, and so therefore we can see that we're actually still above that pretty reasonably. You can see that there is over the last 3 weeks or so very little activity on the Bitcoin front. This is basically the bulls and the bears trying to fight out, or the market trying to decide which direction to take this in. Essentially, we're sandwiched between the 50 and the 200 weekly EMA, and no decision yet has been made as to which way that's going to go. Ultimately, we have our structures on the smaller time frame indicating that we are likely to drop down lower than the 200 EMA, even if that is just briefly. But from a weekly standpoint, we're waiting to see how this market reacts as to whether or not we're going to get confirmation of a direction. Ultimately, we are finding ourselves in a reasonable, we could look at it as a reasonably bullish move in the way that we have lower highs and lower lows. This does want to have a tendency to break upwards, so we have to kind of bear that in mind. We also oversold on the weekly time frame. However, because it's a weekly time frame, that can going to take months potentially to actually formalize and break on out. The other way of looking at this is that we actually have got ourselves the breakdown already from our higher lows and higher highs. Let me bring this in so you guys can see, right? And this one would be bearish at a true weekly level, and we've broken now this trend line, and ultimately that could be an indication that we are looking at further breaking down before we have any kind of relief rally. So we're going to keep an eye on that. I don't think we're at a point in time where we can say conclusively that Bitcoin has one direction and one direction only. From the weekly time frame, we might see a small relief rally before continuing our move to the downside. Obviously, our most bearish situation is essentially looking for that move down, probably more towards $10,000. This is not just a nice round number, but also our curved trend line. Let me go ahead and bring this back to our USD because we have the history here. If you see that if we connect all of the lows, let me get rid of that, connect all of the lows and all of the highs, you can see that actually, yeah, we'll be talking about moving down maybe to our trend line here, which would put us at approximately $10,000 to $11,000. We lose this line, then of course we'd have to curve this down even further, we'd have to adjust it and so forth. But for the most part, as it would sit right now, that's where it would be. By connecting all the lows and all of the peaks, you can see that there's an upper limit of around $113,000, okay, depending on times and things like that, all the way through to the lower side at around 12,500. Maybe it will wick down a little bit lower and so forth. But as you can kind of see, there's no real logical reason from rationale for it to kind of pivot from here. It's up in the area of resistances, and we are looking for corrections here. So for the most part, we are where we are when it comes to BTC, specifically on these larger timeframes. And again, when we take a look at the wallet based on-chain data, we can also see that the moves in Bitcoin currently since 2023 started have only been used as exit liquidity from larger investors. Essentially, large institutional investors have been selling since January 2023 all the way through to current, whereas small retail investors have been buying. There's always a buyer, there's always a seller, and ultimately big money has not been buying and has not been participating. And therefore, we suspect that there's likely to see further downside and then opportunities for those larger institutional investors to buy at a cheaper rate. Again, these are not emotional investors. They don't just buy the dip randomly. They have strategies that they implement, and they follow very logical processes when it comes to investing. So we'll keep a close eye on it, but for now, I think that's everything I have on Bitcoin for today. So if you found this useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, what are you waiting for? Check it out, linked in the description down below. Until the next one though, guys, have a fantastic day.